It was brutal. Portfolios bled, fear took over, and just like that, the market dubbed it Black Monday 2.0. If you felt like giving up, you weren't alone. But if you stayed the course, breathed through the panic, you just passed one of the biggest tests in investing. This week, markets were slammed. The S&P 500 plunged. Tech stocks got crushed. Bond yields shot up. And the fear index? Off the charts. So what caused this chaos? A mix of surging bond yields, lingering inflation concerns, weakening global demand, and whispers of trade tensions returning. When uncertainty piles up like this, the market reacts emotionally and violently. My account was down 30% after Monday's close, which saw the worst single-day plunge in my years of trading and investing. But here's what separates panic from power, the mindset to stay the course. History proves it. March 2020, market dropped 30%, then soared. 2008 pain, then profits for long-term holders. Investing is a marathon, not a sprint. And volatility, it's part of the journey. If you held through the storm this week, you're doing better than most. Now, while it looks like the worst may be behind us, don't let this bounce fool you. The bond market is still nervous. Inflation hasn't fully cooled. And the Fed? Still walking a tightrope? We're not in the clear. This isn't the time to chase meme stocks or FOMO into the next hype. Now is the time for discipline, strategy, and patience. One more thing investors are underestimating: the tariff war. The US is considering tightening tariffs on over $300 billion worth of Chinese imports. China is striking back with raw material restrictions. Meanwhile, Europe, Mexico, and others are re-evaluating trade alliances. This isn't just political drama. It hits corporate margins, supply chains, inflation, and global growth. A prolonged tariff battle could trigger a long-term slowdown, possibly even a modern-day depression if global trust continues to unravel. If you missed our last video on the US-China tariff war, go check it out. And hey, if you want a full breakdown on how tariffs could crush economic recovery, comment below. Tariff deep dive, please. We'll cover it, no fluff, just facts. So, what should you do right now? Well, the smart money is rebalancing, not reacting. They're holding some dry powder, looking for quality at a discount, and avoiding hype while staying grounded. You see, this is where long-term wealth is built, in the quiet moves, not the loud ones. If this helped you breathe a little easier this week, go ahead and hit that like button, share it with a friend who might need to hear this, and don't forget to subscribe for grounded investing insight. No hype, no panic. You survived Black Monday 2.0. That really says a lot about your mindset. But hey, remember, this isn't over. The markets might recover, or they might wobble again. Your job as an investor? Stay sharp, stay grounded, and keep building, one smart decision at a time. Want to know how I find undervalued gems when the market dips? Check out this video right here. See you there.